Good afternoon, everyone. Assalamu alaikum. আশা করি সবাই ভালো আছেন, সুস্থ আছেন এবং এই মুহূর্তে বাসায় আছেন। Welcome to the QOQ Asia Limited virtual studio. This is Saif on behalf of QOQ Asia Limited. Uh, Today, Friday afternoon, we know everyone is at home, but those who has to go out of their home because of their work, emergency, and some other stuff, we believe that you will be maintaining your precautionary measures, you'll be maintaining your hygiene, and obviously you'll be very careful. আমরা আজকে অত্যন্ত গুরুত্বপূর্ণ একটি টপিক নিয়ে আপনাদের সামনে এসেছি। এই লাইভ সেশনটি, দিস লাইভ ওয়েবিনার ইজ ইন কোলাবোরেশন উইথ BFIN, Banking, Finance and Insurance Institute of Nepal, BFIN. So thanks to Dr. Binod Atria, the Managing Director of BFIN, to allow us to join this live webinar together. So let me tell you something about QOQ Asia Limited. QOQ Asia Limited, we have our mission. Our mission is to organize very customized platform for learning and development for those companies, for those employees who are in need despite of this situation worldwide, despite of this global crisis, national crisis. And our vision is to be the #1 organizer, training organizer in the country. And our values, obviously you can imagine from the title QOQ, quality over quantity, is our first value. We have focus on demand, we have global recognition, the most important values, I would say, customer experience, we have accountability, and we also have result driven. Let me tell you in short who we have with us for this live webinar. Obviously, as I mentioned, we have Dr. Binod Atria, the Managing Director of BFIN. He will be the moderator of this live webinar. Our keynote paper presentation will be done by Dr. Shah MD Asan Habib, Professor BIBM, and the co-author of this paper would be Dr. MD Shahidullah, Assistant Professor BIBM. Our distinguished speakers from Bangladesh will be MD Ali Hossain Pradhania, Managing Director, Bangladesh Krishi Bank. We have Pavan Kumar Golian, President, Confederation of Banks and Financial Institutions of Nepal, CBFIN from Nepal. We have Professor Barkate Khuda, PhD, Dr. Muzaffar Ahmed, Chairperson, BIBM. We have Dr. Gunakar Bhatta, Executive Director, Nepal Rashtra Bank. We also have Dr. MD Akhtaruzzaman, the Director General of Bangladesh Institute of Bank Management. So without wasting any time, I would say I will hand over to Dr. Binod Atria to moderate this exclusive live webinar. And before I hand it over to you, thank you everyone who have registered with us for this exclusive live webinar on reshaping governance in banking in COVID-19 regime. So I hope everyone is watching us live. Those who are watching us live, I would request please share this live as much as you can, so we can reach maximum number of people, and people can get valuable information from the industry experts. And also I would request our distinguished speakers to share this live on their social media, so that your fan followers can watch you live. And if they have any questions, if they have any comments, or if they have any suggestions or advice, they can post it through our Facebook page. So Dr. Binod Atria, over to you. Thank you so much.
Thank you. Distinguished delegates, it's a pleasure for BFIN to be involved in this webinar, which has been jointly organized between BFIN and QOQ Asia Bangladesh. The topics of the discussion today is on reshaping governance in banking in the COVID-19 regime. That is the topics of the discussion today. So first of all, let me thank the BIBM for collaborating with us, collaborating with BFIN and hosting this webinar. So indeed, I do feel that this type of collaboration will be helpful for exchanging the information between both countries, learning each other, sharing information. And as we are in the same area, we are in the same region, we would be able to get more and more information and learn from this type of discussion. I would request BIBM to further collaborate in the future as well, so that we can learn each other, share information, and collaborate together, and strengthen the financial sector in both the countries. This is what I do believe is the most important result that we will be achieving from this discussion today. So let me share with you about the BFIN. Banking, Finance and Insurance Institute is a public limited company promoted by the 16 banks and financial institutions. It is promoted by the 7 commercial banks, 2 development banks, 2 finance company, 2 microcredit institutions, and 2 capital market institutions, and the Emerging Nepal Limited. The Emerging Nepal Limited, it is a venture capital which has the share proportion from the Ministry of Finance. So we are indirectly a part of the government agencies as well. So this is how we are in close contact with most of the training institutions across the world. Let me share with you that we have a strategic alliance with the BIBM, and we are together, joining hands together in expanding the knowledge base in the region. We have conducted so many training programs together. We have invited resource person in the previous webinar as well, like Dr. Asan was here with us in previous program also. So this is one of the opportunity created by COVID-19 also. We should be collaborating more and more so that we would be able to learn more and more. So now let me thank our speaker. Like I can see here, Anupamaji, she is the CEO of Mega Bank. She is the first lady CEO in Nepal. So she is one of the she has started her career from Grindage Bank, Standard Chartered Bank, and now she is the CEO. So I am very much thankful to Anupamaji
Thank you.
for joining us today. Likewise, Pawan Kolyan is the president of the board association. With the board means the name is like as we have said, means Confederation of Banks and Financial Institutions Nepal. So all the board of directors, they have joined together and they have formed this association so that the board voice could be heard to the central bank and other to the management also. So he is the president of the Confederation of Board and Financial Institutions Nepal. So let me welcome him as well, Pawan Kolyan sir. Thank you for accepting our invitation and joining us. We will be hearing from you soon. And we have Gunakar Bhatta. He is about to join. He will be joining. Nishu is coordinating with him. Today, we are lucky that we had the monetary policy announcement. So after the monetary policy, probably he would be able to talk more on the governing issue. What are the governing issues that they have decided today in the monetary policy? He would be more able to share the Nepalese monetary policy that has been announced today. So probably he will be joining soon. So let me also thank the Gunakar Bhatta who will be joining after some time. And these are the prominent speakers for Nepal, because when Dr. Asan asked me to collaborate this together, and when he said the topics is on reshaping governance, then we discussed, myself and Dr. Asan discussed how we should formulate this discussion program. Then I selected Pawan Kolyan, who is the president of the board association, and I selected one management from the bank, Anupamaji. Then I also selected the central bank, who will be more vigilant on the both side. Means the central bank will be vigilant on the management side as well as to the board side. So this is how we crafted this webinar, so that we would be able to get more and more information, the practical experience that Pawan Kolyan will be sharing, how the board is handling the management, and the management, Anupamaji, who is in the management side, she will be able to tell us the practical side of the management problem during COVID-19. Now let me just highlight about the COVID-19. Means as of today, we don't know what will be the impact on the financial sector as a whole. We are just imagining. We have seen some figure that the global GDP growth will be negative, and I have seen some figure from Bangladesh and from Nepal also. Even though we are slightly in positive in GDP growth, but we are not sure whether it will be positive in the long run or it will be negative in the long run. Those are just speculation. Those are just projection for the timing. So before doing anything long, which I will be summarizing at the end about the paper. Now, let me request the paper presenter, Dr. Hassan, to take the floor and share the paper so that we can listen to you. Your very thoughtful paper that I have seen. A new model has been designed on the governance issues that I have seen, and the thought that we have been talking previously. Okay, what is the board role? That is something different over here. Normally, in the previous conventional way, when we are talking about the board role, that was something. Now you have come up with a new formula, new models for the COVID-19 perspectives, which will be very, very important for the board as well and for the management as well. If we are able to move forward with these models that you have suggested, probably we would be able to tackle this COVID-19 issues as we have to go with this COVID-19. We don't know how long we have to go with it. So with this, again, thank you all the speakers who are over here. Thank you, BIBM, for joining hands with us together. Please, Dr. Hassan, the floor is yours. Please go ahead.
Thank you. Good afternoon. Welcome to our presentation. Respected moderator, honorable speakers representing Bangladesh and Nepal, and dear audiences from Bangladesh and Nepal. I'm going to present the keynote on behalf of our team comprising Dr. Mohammad Shahidullah and myself. Yesterday, we tried to reach the speakers and the audiences with the draft keynote, and I hope more or less we all are aware of the content of this particular keynote. Now, what I'll be doing, I'll be simply trying to focus on some background literature and an indicative framework to have discussion based on which we will be finalizing the paper. Now, let me start with a quotation of the famous Russian Mr. Vladimir Ilyich Lenin. There are decades where nothing happens, and there are weeks where decades happen. It matches the speed of devastation that COVID-19 brought in. We all are trying to address the sudden challenges from our own perspectives. And we know that in Nepal, in Bangladesh, everywhere, banks are doing from their own. Now, what it appears from banks' perspective, at this moment, transformation is necessary. Demands from banks' leadership have become very high, or you may say, there is now extraordinary expectations. Now, the proactive roles of banks in supporting the policymakers and other stakeholders is crucial, particularly in developing countries, because in these countries, we have got some inherent socioeconomic challenges that may not be true for the developed countries. And we have also got huge resource limitations. Now, improved and reshaped corporate governance in banks in developing countries might help handle the situation better in this complex situation of multiple crises, because it is health crisis, it is an economic crisis, it is a banking crisis, and I think it's also a policy crisis. All the policy interventions are not working rightly. See, today, health sector needs support. Our economy, Nepal economy, Bangladesh economy, they need support. Our banking sector needs support, and our policymakers, they also need support. Now, the objective of this keynote paper is to sketch the reshaped corporate governance practices in the banking industry in this COVID-19 scenario. Now, about the conceptual issues, we believe certain literature connected to emergent corporate governance, which means adjusting corporate governance as time evolves. Then enterprise risk management, which is about integrating boards in handling risk aspects of banks, and the experiences of the earlier crisis. I think these are the key relevant issues whenever we talk about conceptual issues. Now, banks' board are expected to change their approach and roles during financial and business difficulties as evidenced from the literature of the earlier crisis. There are these are basically connected with handling tough business conditions, enhanced risk management, business diversification, and regulatory responses. Regulatory and societal expectations from banks, board, and senior management increase exceptionally in emergencies. And banks' responses to these expectations of the policymakers have got proven implications. And this is also true for all the earlier crises. Now, what are the areas of banking operations where management needs policy and strategic directions in times of COVID-19? COVID-19 is practically testing the resilience of the traditional banking business models. Employees and their clients entering the workplace are at risk. Bank employees, who are the biggest assets of banks at this moment, are confronting job cut fear. Capacity development initiatives have been paused. Contraction of banking activities and underperformance are clearly visible. Banks are underperforming in their customer services, and there are fears of the erosion of customers' confidence. Businesses need huge support of banks, especially small and micro enterprises. Banks are struggling with their businesses and having concerns on liquidity and their implications for capital and solvency. Key functional areas of banks like deposit collection, your credit processing, and trade facilitation, these are confronting newer challenges and risks. There are skepticisms that increase in NPL, non-performing loans, might be a critical challenge in the coming days. Alongside these business challenges, financial crimes associated with money laundering, information technology, security frauds are showing increasing trends by taking advantage of the current situation. There is also potential challenge of the misuse of the stimulus packages that are getting implemented through banking institutions. Now, in such a situation, the existing regular banking strategy will be inadequate for ensuring business continuity, meeting regulatory expectations, and for ensuring a similar level of depositors' confidence and trust as before the crisis. On the way to address these challenges, the paper identified an indicative reshaped form of corporate governance practices in this critical situation. Let me state clearly, the board's role continues to be one oversight, no doubt about this. That is clearly globally accepted. However, as in any other high-stakes context, this situation demands greater attention on the part of the board and may require higher involvement depending on the degree of challenge the COVID-19 presents to the banking, businesses, and the economy. The components of the reshaped corporate governance of this paper include key regular components in a renewed form, assigned emphasis on certain activities with the broad goals of business continuity in this COVID-19 situation and for igniting long-term business growth. This is probably what conceptually called as emergent corporate governance in response to the changed scenario. Now, what are the key components that we are recommending from our side? Firstly, intense oversight responsibility. Yes, oversight is the regular responsibility of the board. However, we are talking about more involved oversight that are not required in the normal scenario, rather sometimes unexpected. Bank's board must receive updated and regular information and reports on the existing and potential risks that might be evolving in light of the oversight responsibilities and as a matter of good corporate governance. A possible tool available to a board to address its monitoring and oversight responsibilities is to create one special committee and maybe a number of special committees. Then, very engaged leadership network. By leadership network, we mean it's a combination of board and senior management, top management, under which bank must have arrangements of continuous dialogue with the management to identify issues and provide strategic directions to handle evolving challenges. It is a crucial time for the boards to give management an adequate discretion in handling hasty and vital issues while providing the required sense that the board is ready for taking more active roles and responsibilities if needed. Especially the critical issues, including liquidity, capital, financial resilience, that should be under continuous observation. That is true for, I think, all global economies, both developed and developing at this moment. In addition, well-informed and monitored business continuity under board senior management leadership in line with the developments in key functional areas covering general banking, credit, trade and foreign exchange operations are really, really crucial at this moment. Supporting policymakers is a very important task at this moment. A bank must have an internal strategy for economic stimulus packages so that its clients and the bank itself can optimally benefit from this. Clients having financial strength and not being affected by the crisis should not be facilitated. We have got scarce resources, both in Bangladesh and Nepal. We are aware of this. As a crisis response strategy, policymakers around the globe are following almost common approaches of injecting money in the economy to ensure greater liquidity with the banks. However, if banks do not respond to proactively and finance the economic agents, the national policy goals of the countries like Nepal, Bangladesh cannot be attained. The bank leadership must be aware of a probable regulatory backlash if they do not respond to regulatory expectations. Let me remind you the situation, the following 2007-2009 financial crisis, and an unusual increase in prudential requirements and regulatory scrutiny and compliance cost that has put pressure on banks' profitability later. So it is our responsibility collectively to respond to the policymakers rightly. Thus, meeting the expectation is costly sometimes, no doubt. However, failure to respond adequately might be even costlier for the banks. Banks must be very transparent with the regulator on compliance issues in this critical situation. Banks must also be ready and open to collaborate with the regulators for ensuring effective financing in this emergency. Yes, I agree. Some banks might be having critical financial condition. And this must be clearly informed to the regulator to fixing the expectation at right level for that particular institution. Now, for risk management functions, it is the time for installing factual enterprise risk management. I use the term factual because we have been saying that we have got the arrangement for enterprise risk management. Practically, it is not. Sometimes we say that in this situation, all board members are active members of risk committees. Banks need to update their newer form of credit risk, cybersecurity, crime, and other operational risks to mitigate the evolving risk exposures in line with their risk appetite. Board and top management must be satisfied with the reliability of the risk information and reports that clearly identifying the priorities of financial and non-financial risk. That means you need extraordinary information set up now, information network at this moment that may not be required at the regular scenario. The role of taking care of all stakeholders needs to be strengthened in this particular scenario. Yes, that is regular, but we need to strengthen further at this moment. Now, why? People like clients, employees, communities are the biggest assets for the banks in this particular situation. We need to address them very strongly. Bank leadership should focus on delivering essential banking services to the clients, working on long-term employee wellness, and fulfilling social and financial needs of the community. This is connected with banks' reputation, trusts, marketing, and also for potential good businesses in the coming days. Restraining profit targets and investing for future growth is the key. No doubt for banks, profit is very important, but however, traditional profit motives should be held back at this crisis situation, because running after high profitability of the normal situation might be an unreachable ambition and lead to damaging effects for future business opportunities and reputation. This should rather be a period for investment for creating medium and long-term business opportunity. Now, very essentially, it is time for moving beyond the corona crisis and reassessing long-term business strategy for business transformation for all the banks. Simply responding to the evolving situation would hurt competitive advantage. Maybe we need a wide-ranging transformation covering human resources and organizational structures as well. It might include significant workplace transformation, renewed and remarkable boost of IT and fintech, and moving towards comprehensive digitalization. Finally, and very importantly, if a bank fails to reset itself with reshaped strategic approach during this COVID-19 crisis, trust from consumers, businesses, and the community could be at risk. However, bank's board and the senior management must maintain the fundamental distinctive line between them regarding the scope of work for maintaining the sanctity of the good corporate governance practices. It is important to keep in mind the greater engagement of board in the form of exercising undue interferences and drawing unwarranted privileges in this emergency situation would be destructive for the economy and counterproductive for the sustainability of the banking industry. Practically, the board's enhanced engagement in this unprecedented scenario must be encircled mainly with the noble causes of cooperating the collective efforts of economic recovery, supporting vulnerable stakeholders, and undertaking longer-term strategies for igniting business growth. For a bank's board, it is about shouldering greater responsibilities and reflecting accountability to the society by restraining excessive profit in this short term, in the short run, for the sake of the long-term business, social, and economic growth. Thank you. Thank you very much.
Yes, thank you, Dr. Hassan, for your wonderful presentation. Indeed, you have covered the most of the governance issues that lies for the board as well as for the management. One thing I like about it is that during emergencies, board and management, including the risk management committee, they have to be together. That is the thing that I liked very much from this paper. But at the same time, you said that there has to be some sort of demarcation between the board and the management. That is what the message is very much clear. So now, without any delay, let me request Anupamaji now during COVID-19, how the board and management has been able to combine together to mitigate some of the risks that we have seen in the COVID-19 regime, and what governance structure or how board and management work together in this scenario. Maybe your practical experience will be very, very important to validate this paper, because we believe on practical issues rather than on other issues. So Anupamaji, as Dr. Hassan has said, board and management has to be together during emergencies, during COVID-19, which is a very difficult situation, and we need to go together in the future as well. But at the same time, there is a need to have some sort of demarcation, because boards should not be influencing in day-to-day matter, or even the small matter, boards should not be handling these. But in the policy matter, yes, because this is something a different situation. Here, we need to meet together, we need to force together, we need to cooperate together, and try to solve the issues that are invisible because of this COVID-19. Now, Anupamaji, take the floor and share some of your thoughts on the paper.
Dr. Vinod, sorry to interrupt you. Before Anupamaji starts, I just would like to remind all of our distinguished speakers, kindly share this live as much as you can, so that your fan followers can watch it live. And we have also with us Dr. Gunakar Bhatta, the Executive Director from the Central Bank of Nepal. So yes, Anupamaji, over to you.
Thank you. Thank you, Vinodji.
Anupamaji,
Yes.
Give me 1 minute. Let me welcome to Gunakar Bhatta. He is the Executive Director of Nepal Rashtra Bank. Currently, he heads the research department. It was his responsibility to draft the monetary policy, and today Nepal Rashtra Bank has announced the monetary policy today. So we start our fiscal year by July 15. So he would be able to share us what are the governance issues that has been covered in the monetary policy as well. So that will be a very, very informative for the Bangladesh as well, and what measures are being taken. So Gunakarji, welcome to this webinar, which is combinedly run by BFIN and the QOQ Asia Bangladesh. Welcome again.
Thank you. Thank you, sir. Good afternoon.
Good afternoon.
Thank you. Now, Anupabaji, please take the floor.
Thank you, Vinodji. We've heard a lot for corporate governance by the keynote speaker. I'd like to thank QOQ and BFIN for giving me this opportunity. When we talk about corporate governance, it was very important in the past, today, and going forward also. That is what we believe in our organization. The entire running of the organization with the direction, with the decision comes from the board. And the management as a CEO, I really feel that we are the liaising body. The CEOs are the liaising body between the board and the management, whereby all the policies, the vision, the objectives are taken down to the management for implementation. As soon as the COVID-19 started and the lockdown situations fell upon us, it was definitely new to us. The working environment changed completely. So the first thing that we did was we opened the BCP, Business Continuity Plan. The Business Continuity Plan had how we're going to work further in this COVID-19 situation and the lockdown period. So the communication between the board, the senior management, and the senior management taking it down to the entire staff members had to be laid down. So now, because of the digital world, we could get all our staff members. In fact, Mega Bank, as the CEO of the Mega Bank, we completed an acquisition process of a development bank in this COVID period itself. So we can well imagine, this particular period could also be fruitful for the organization. So we have entire staff members in one particular platform where, when you give instructions, it is communicated to each and every staff members at one go. So these are the new things that are coming up. The first and foremost thing that we realized was work from home. Because we had already initiated a chapter where we thought of cutting cost and using digitalized signatures and document management systems. These introduction of these digitalized systems helped us to make sure that we could do the normal work of the bank and serve our customers on a continuous basis. The very next day of the lockdown period, I think we were able to service our customers, the depositors, for their fixed deposit renewals, for account opening through the digitalized account opening system that we've introduced, and the services that we give through digitalized platform, the ATMs, withdrawing of your deposits anytime you wanted. We didn't stop those sort of services at all. So if we talk about governance issue, we're taking 5 stakeholders very importantly. The first thing we decided was how we are going to serve our promoters and shareholders, be transparent, communicate with them, and inform them what is actually happening, so that they, being the owners of the organization, should realize what sort of services are continued and how we are protecting the entire bank's asset. So when we talk about the bank's asset, there are 2 things. One is the quality of the asset that we book, and the most important asset, we call it our human resource asset. We had to make sure that we motivate them and we keep them motivated, working every day, taking care of their health, making sure that we take care of their health. The transportation was given, the PPP was given, the mask was served, the sanitization was taken care of, so that they feel comfortable coming back to their workplace. So for now also, making sure that we are transparent with our promoters and shareholders and their return. Today, the central bank has also come up with the monetary policy. The returns should be no less than the depositors' return, because they are taking risk, and they should also be receiving returns on a yearly basis. So that has been addressed by the monetary policy. The second being the regulator and the government. These are our second stakeholders where we should take care of all the time. So suggestions, what should be the factors that our central bank should be addressing in the monetary policy was given by the NBA, it's a Banking Association of Nepal, where CEOs represent there. And we've given a paper to the central bank, and yes, issues have been addressed today. So making sure that the government GDP growth of 7% is still going on as per the monetary policy, will not deviate from that. We are going to put in all our efforts to assure as a bank that we keep the economy going on strong. And on this front, we have to make sure the third stakeholder is our customers. You know, they can sustain. If the customers can sustain, that is profit for the bank today. If the banks can sustain, that is profit for the bank today. Days will come when we'll start earning again and giving handsome returns. For now, because of the COVID-19 period, because of the lockdown, we really believe that sustaining the organization and sustaining our customers is our prime focus. So as we said that we are giving facilities for employees to work from home, similar facilities for our customers, bank from home has been initiated. Now, what do you do in bank from home? They should be able to open accounts. They should be able to do account transfers within the bank, in amongst the bank. They should be able to withdraw their funds. ATMs were running very well. The QR code that we use now, so that you don't have to play with the cash, and the POS machines, the digitalized platform every bank has. You know, we have a mega mobile banking center. We are looking for mega tick banking, whereby the customers go into our website and just tick which products they are looking for and how they can, you know, stay at home and utilize those products. And even mega market, where, you know, our customers put in their products in our portal, and our customers can buy it off there from there. So online banking system for them. So a whole different aspect of serving our customers have come into play. Similarly, for employees, as I said, we take care of their health first. Then we assure them that their jobs are stable. And that can be possible until and unless we are able to satisfy our owners and we're able to give reasonable return for the moment.
Anupam ji, may I ask you one question, please? Sorry to interrupt
sure.
you. As you have just mentioned in terms of branchless banking, so if I want to open an account in Mega Bank, so I don't need to go to your any of the branches. I can do it
Not at all.
at home.
You can just go into log in our website and you know, send the request for opening the account. And KYC will have to be done face to face. That is most important. But in the initial phase, your account number will be delivered to you. And as you have time, you can come in and update your KYC.
So is it implemented all over the Nepal, or it's only your bank? I'm just asking. I'm just being curious.
Few of the banks have already started it. Not all the banks, but everybody is going towards that direction.
Thanks for addressing the question.
Thank you. So as I was saying, it's employees. The most important asset of the organization is definitely employees. So we have to make sure that their morale is up, and we make sure that we communicate continuously. At these trying times, I myself make sure that I communicate on a daily basis, in the morning and in the evening, before we, you know, say goodnight to each other, and make sure all their issues are taken up immediately by different units. So because we went into acquisition also, there was a definitely the trainings went through Zoom, and it was very effective. So we've learned new things in this COVID-19 scenario. I always say there's a silver lining in every cloud. So I think we are making sure that, you know, we all come into the same understanding. The culture is going to be changed now because of the acquisition. Now the people from different culture have come in. So we have to put in more effort to make sure that we communicate top down and down up. So in all this aspect, you know, we've made sure that the board meetings through Zoom or physically has been enhanced. In fact, my board was even saying we are having too much of board meetings, but this is the time to make sure that we take into consideration the risk aspect of the bank. We have developed during this COVID period the actual reporting format to the board, you know, the daily, maybe the daily deposit figures or daily lending figures, or, you know, the usage of our alternate channels, how many people were logged into the system, or, you know, how many people have now come into, you know, taking digital, you know, access to of our bank. So in this COVID period, we've seen that around 65% of our customers have come into digital banking. So that's a huge surge and a change that I think our banking sector will be observing in days to come also. Amongst these four, last but not the least, the fifth is the society at large. We have been contributing in our government's fund. We as a bank contributed 1.35 crores from our corporate social responsibility fund. So this sort of support from the banking sector will definitely carry on there. And to make sure that, you know, all the more responsive now, we have changed our structure in between. You know, we quickly understood that now risk management functions are going to be very important. So we've assigned a senior most official to took care of the CRO's position. So the CRO is definitely going to link the board and the management more often, and making sure that ERM is taken care of. And as the keynote speaker said, we have to be very closely monitoring the liquidity aspect of the organization. So the liquidity report, the maintenance of all regulatory ratios, the progress in our asset book, the deposit book, all these reports have been started. We have started sending this to our board so that they are totally aware what is happening on a daily basis. Initially, we didn't have this, but due to the COVID situation, due to the lockdown situation, we wanted to make sure that our senior management, our managers, and the board is well informed as to how our bank is going forward in this scenario also. So I'm very happy to share also. There are many negative indicators coming up from the entire banking sector, but if you do the right things, we've observed growth in this period also. We're talking about liquidity crisis, and in Nepal, it's a little bit different. The banking sector is really facing a lot of liquidity influx, and most of the banks are liquid now. But yes, of course, days ahead are very difficult. There might be many changes coming up, and we have to be aware of that. Central bank has also eased the liquidity scenario and then enhanced the CCD requirement to 85% from 80%. So we are very happy that the liquidity scenario will be catered in the banking sector for Nepal, and going further, we'll be able to address the issues, the risks that arise from different part, operations part, or credit risk part, be it market risk part. We are monitoring it on a daily basis rigorously. So I think that is the way forward for the banking sector. And with the board, there's a clear vision and what is required of us. And internal management system, we have introduced DAR, that is a daily, you assess yourself on a daily basis, and you assess individually your productivity every day. Each and every staff member fills up that requirement, and they get to review what they've done for today and what is required of them. So as you monitor this closely, things goes very smoothly, and the issues come up and we are able to resolve them also. So productivity every day is the thought process, and we've been looking at very critically to assure that everybody is engaged, because at this time with the lockdown, with the 25% staff working in the organization, with the 50%, and now with the 75%, because of the year ending, we've been monitoring each and every staff's activity. So HR has to also come up very strongly to assure that the engagement level is high. And as expressed, our risk team will have to be more engaged. and they have to make sure that we have segregated our customers in 3 different pattern. One is green, all those customers who are not affected and they are able to serve themselves. Yellow, where the banks will have to look into their business and support slightly. And the red zone customers, definitely, we have to support them not only now, even a little bit longer, because the aviation sector, the tourism sector, and the construction sector has suffered a lot. So we have segregated our customers into categories, and we've started supporting them to make sure that, as expressed by the keynote speaker, that those who are already in good business and they are earning at this moment also, they don't take the benefit. And those who have really suffered, they are, we give them sustainable packages, not only for a year, but, coming 3 years also, because they are really hard hit. So taking all these things into consideration, the most important aspect I see is the values that we carry on a daily basis. We as a bank, we live with our 5 values that we call STAR values. Service centric. We have to serve our customers, and we have to change. We have to be a agile company to make sure that, as per the need of our customers, we change our services. So digitization is one prime thing. Taking care of the cybersecurity, we have to push digitization. So in our new structure that we've introduced now in this COVID period, we've assured that we have a separate unit, R&D unit, and a digitalized unit, along with the risk head that we have assigned, CRO. So with this, we have service-centric as our value. We have transformational as a value. Each and every staff members on a daily basis, they have to think differently. So, transformations happen. If we talk about our organization, we are just 10-year-old, but now, if you see the balance sheet size, amongst the 27 commercial banks, we are on the 10th position. So how can this happen unless you feel you put in, from the board, the vision of transformation? It's not possible. So you have to live these values. That is what we believe on a daily basis. So, it's service-centric, it's transformational, it's action-oriented, result-focused, and synergistic. These are the values we all bankers live on a daily basis. So when we inculcate these values, the corporate governance that we are talking about, which comes from the board level, this can be transmitted to the staff members who's just joined in the organization very smoothly. So that is it, what I have to say. And I think this COVID-19 period is definitely going to give a tough time to all bankers. And we have to come up with new ways to fight this and sustain this at the moment. And days ahead will definitely be good for all of us. Thank you.
Thank you, Anupamaji. Thank you very much. Indeed, you did share about the operational issues. You did also share about the relationship with the board management, also about your mega bank as well. Thank you very much. It is indeed a pleasure for all of us to hear from you. Definitely, your thoughts will be very much appreciated, and it will be incorporated in the paper. And just to let you know that this paper is going to be published in BFIN journal, which is coming out on 14th August. On 14th August, it is the anniversary of BFIN. So, so we plan to publish this paper in our journal as well. So now let me go to Ali Hussain Prodania, sir. He's the Managing Director of Reshaping Bank. Please take the floor, sir.
Thank you, Mr. Binod. Thank you, learned discussion here. Dr. Akhtaruzaman, Director General BIBM, Mr. Gunokar Bhatta, Executive Director of Nepal Rashtra Bank, Mr. Professor Barkude Khuda, Muzaffar Ahmed, Chair Professor of BIBM, Mr. Pawan Kumar Goyan, he is the President of Confederation of the Banks and Financial Institutions of Nepal, paper presenters, especially Mr. Hasan Habib, Professor of BIBM, and Anupamaji, the special experience that I have gathered from your speech, and Mr. Saif from Q&Q Asia, and those who are live with us from Facebook Live. Very good evening to you, it's almost evening to you all. Anupamaji, that you have explained your bank, the Mega Bank Limited. I am from a different platform. That is absolutely, you know, the Bangladesh Krishi Bank. This is the state-owned largest bank for agricultural finance in Bangladesh. I have other different experience during the COVID-19 period. As you know, we have to the public holiday, that is general holiday, from 26th of March. And thereafter it continued until 31st of May. During this pandemic situation and
it's 6 o'clock.
General holiday, we have to work from office. This is the exception in between the Nepal Rashtra Bank and in between the Mega Bank and Bangladesh Krishi Bank. The experience is quite different because we have some challenges. Number one is the new risk that Professor Hassan Habib has mentioned. That is the infection risk. We have to just taken over the risk of the infection, and we have to keep open all of my branches. These 1,038 branches, we have to keep it open. Why it is? But what we did, we have just rostered the duty. Maybe we have made in small branches, we made 2 committees, just 2 teams. If any one of the team is affected, the second team will work. And the big branches, we made the alternative in the 3 working team. Why we have to do this one? Because we have the target for the agricultural credit disbursement. It's a huge one. And as you know, the platform of Bangladesh Krishi Bank, we are not digitalized, we are not online. 50%, almost 50% of our branches are online, and the rest of the branches are manual. Under these circumstances, we have to serve our customers physically and also digitally. We have to serve the, what is called the government's benefit holders, about 20 lakhs with this with my bank, and we have to serve the social safety net benefits, and there is no digitalization. They come over the branch to take the benefits on a monthly basis. But out of this whole issue, it is a very wonderful experience, because you know, the initially we do not know exactly what is going on. They required on the daily cash, they required the transaction banking, they required the cash support from the others. So we have to keep a manual record. The branches, they have reported online, what is their daily receipt, what is the daily payments, and how much fund they have to discount from the other banks, and we have to feed them from the centrally and from Somali Bank and others. So the cash management, it was a very difficult task for us. That's why we have to follow up the every single transactions. And also, we have to keep on tracking the disbursement, because we have the target of the disbursement of the agri credit and as well as the stimulus packages that declared by the government. Because one of the stimulus packages, which is 5,000 crore taka, the majority portion, almost 1,200 crore taka, the BKB loan is to distribute. And the size of the loan is quite significantly low. The number of accounts would be quite high. That's why we have to disburse this loan through the manual platform, because it requires the inspection. What I did actually for disbursing this loan, we have instructed the branch out of the existing client, we made a list. The worst affected, those who required the major support from the bank for the revival, and the clients, those who required no support and the minimum support in 3 categories. And accordingly, we have listed them, and centrally we have the database. We are disbursing the loan, and the disbursement target fixed accordingly on the daily basis, because we have some targets. We have to achieve the target by 30th of September for the revival of the economy, the stimulus package, and that almost 4 packages we are working on it, but we are achieving the targets on the daily basis, and hopefully this bank, my bank, will be able to achieve the targets on a timely manner. And that will act actually for the poorer section of the people, especially the farmers, especially those who are engaged in CMSME. And for the big corporates, I don't have actually that much big corporates out of maybe 10, 15 plants I have. But I have to serve the people, those who are underserved. I have to serve the customers, those who are in the below poverty line, those who are actually in need of agricultural credit. I have to serve those customers. And it is the priority sector as well. So we are basically lending the priority sector. That is the difference between the two banks. Now the question of the presentation, I would like to say the right issue that is being come up with the shaping the governance in banking system in COVID-19 regime. That is a very important issue. I thank you, Professor Hassan Habib and Professor Shohidullah for presenting the nice paper. And also I learned a lot of things from Mrs. Anupama. And what is the reporting line, basically, the board and the senior management. We have to have the board meeting on an every day, every week. And also the honorable chairman of the board, as well as the risk management committee of the board, with the senior management team, we have to sit together almost every alternate day. And the situation, what is going on, especially the liquidity, the credit, and also the risk associated with the infection, and how many officers being infected, and what is the feedback from them, and how to just run the branches, how to support the branch from supplying the manpower from the controlling officers and others. We have to sit in every alternate day, and we have to have the board meeting on every week. And the board, including the liquidity and the risk management, and also there was another issue, as you know, that the interest waiver as per the BRPD 5 circular that we have to have on every board meeting. So what is important? We engage the board in every issues, even it was not the issues of the board, rather it was the issue of the senior management, but we keep the board informed that this is the situation we are running. And under these circumstances, we need the refinancing, or we need the liquidity support from the central bank. But very important is that under this pandemic situation or the crisis situation, what Professor Hassan Habib mentioned, it is very important that the stakeholders, and even the Anupama ji mentioned that the stakeholders, they should always be informed. Even the regulators, they should keep and inform the updated situation, whatever the support required from the regulators. And regulators, they are, as you know, the Bangladesh Bank, the regulator, they have opened a lot of windows to make the liquidity available in the market. And also the stimulus packages declared by the government, is a majority of the stimulus packages is bank-based, and the central bank was very prompt to declare the policy guidelines in implementing the stimulus packages. What is important during this COVID situation, we have the dual experience of serving both digitally and manually. I have seen a research paper today. It's about 250 banks and 50 over countries. there is a different options that majority of the customers, they have been served digitally because of the lockdown and others. And there are opinions also, almost 24%. The people also opted for the transaction, maybe the physical transactions. And what happened during this COVID-19? We served the customers, especially the transaction banking, basically the transaction banking, the credit cards and others. But what happened, especially the credit, as you know, the credit growth, it is almost 11 years low, it is 8.82. This is one of the reasons during the pandemic situation when the general holiday, the banks, most of the banks, including the government and private banks, they cannot provide the credit despite requirement of the customers. So now the challenges actually, what I mean, during this pandemic situation, yes, the customer satisfaction and the automation, also the transformation of the transaction banking to the digital one, but still we should have to rethink and we should have to survey. Is there any section of people, those who remain underserved? Is there any credit customers remain underserved? That we have to also evaluate. Because of the customers' dissatisfaction, customers is the asset of the bank, one of the biggest assets of the bank. And we have to evaluate the any dissatisfaction from any section of customers for remaining underserved, that we have to check as well. The other side, that even the transaction banking, we have to calculate the cost of the transaction banking as well. But we don't have alternative. The pandemic has learned a lot of things. We have to have the digitalized everything. But once again, we have to calculate whether the transaction banking becomes very costly, or we have to involve the fintech companies for the transaction banking and others. This is the time to evaluate. The risk evolve. Of course, there are a lot of risk in terms of the credit risk, because the big, including the big corporates, the small borrowers from the CMSME or any segment, because of the pandemic situation, they are affected very badly. There is a shortage in the cash flow. And also the regulatory forbearance is there also. In some countries, the classification of the assets, it's being delayed for even six months not to pay the installment, and the classification status will remain unchanged. Under these circumstances, the risk management team, they have to evaluate the actual scenario, considering there not been any regulatory forbearance, then what is the situation of the bank? What is the quality of the assets? Or even after the forbearance, what should be the quality of the assets? What should be the cash flow? And how it can be managed over the times? That is the theme of the risk management and the senior management team of the bank. And I always prefer, and it is to be in the reshapes management, I think always the board should be informed, and the board should always informed, and they should be I know that every board has got the wealth of knowledge about the banking and the implication, economic implication. And if board, senior management team, and the risk management team, as well as the ALCO, Asset Liability Committee of the bank, they should work together, and the decisions, it is better to inform the decision to the board, and whatever the outcomes in the senior management team, it is time to time the board should keep informed for the fine decision. And under these circumstances, and there are some other risks as well, which is evolving, which requires the reshaping of the corporate governance. That is, in case of external trade, that is the import and export. Even for the known customers, known exporters, known importers, we should have to have the credit report before going for any transaction because of the supply chain disruption and the demand side disruption. There are a lot of changes in the even the big corporates as well. So under these circumstances, I would recommend that from my experience that before I close, I would just my experience is that we have to prioritize the people's safety first, which is who are the biggest asset of the banking industry, and reshape the strategy for the business continuity plan. That is a very important one. Under any circumstances, maybe the COVID-19, when it will be finished, we cannot conclude. But under these circumstances, we need the business continuity plan and close communication with the stakeholders. That is an important issue also. And commensurate with the government support as well as the regulator, keep the regulator informed the situation and the reporting, whatever they need. It is very important. And build resilience to everyone to comply with the new normal. I thank you very much for giving me that time. And thank you very much. Thank you, sir.
Thank you, sir. Thank you. Thank you very much for your nice presentation. Yes, the subject of our discussion is so interesting that we would like to contribute more and more. But at the same time, we need to look into the watch or we have to manage the time as well. So my request to all other speakers would be to confine the presentation within 10 to 15 minutes. Even the timetable that we have been given is about 10 minutes, so that it will be easier at the end to share other views also. So now, thank you very much, sir. We have basically now in Nepal also we have an agricultural development bank. This agricultural development bank is more focused on agricultural lending, even though it is a commercial bank. But even now today, the monetary policy announced has given more priority to the agricultural development bank, and they have asked to issue the cards also. So I think Gunakar Bhatta will be able to share more on those areas as well. But again, will be in touch with you also whenever there is a need to bring our officials to Bangladesh regarding the agricultural loan. Definitely, I will be in touch with you so that we can collaborate together, learn from the agricultural lending that you have over there. With this, again, now, thank you very much. Now, let me go to Pawan Kumar Gulyan, sir. Now, Pawan, sir, is the president of the Confederation of Bank and Financial Institution of Nepal, and he is also a chairman of the NMB Bank. So he he is a chairman of the board as well, and he also represented as a president of the all board of directors. So let us hear from Pawan sir. So now during this COVID-19, as a chairman of the bank, as well as a president of the Confederation of Bank and Financial Institutions Nepal, how you are able to drive your bank as well as drive the entire financial sector in Nepal. Please go ahead. The floor is yours. You are on mute. You are on mute. You are on mute. Yes.
Is it okay now?
Yes.
Okay.
Yes.
Good evening, everyone. Thank you very much, Atre sir. Good evening, everyone. I don't remember all the names, so I will not take the names of everyone. But thanks a lot for giving me this opportunity. I cannot speak like the previous speakers. I'm not a banker at all, but I'm just a board chairman. So I will limit my role to that, and also as a president of BFIN, that is Confederation of Banks and Financial Institutions. To answer your question, and just to give an insight what we are doing in Nepal in the banking for A, B, and C class banks. Basically, after the COVID situation, we have realized very soon that we need to take care of our 4 stakeholders, what Anupama ji has also explained, but I have a little bit differently it's almost the same. One is our shareholders, primarily is our shareholders. Then is our human resource, of course, the employees of bank. That is very, very important, especially the frontline people. And then the depositors of the bank, and also the client stakeholders, that is client and our borrowers. So these are the four. We wanted a win-win situation for all four as a board member also, and also to make the a little bit equation between all four, so that nobody suffers at this point of time. Uh, then the situation we came across is, the first and foremost is our human resources. In the front line, we made sure from the board also, and when we discuss in the CBFIN also, that in every bank, what Anupama ji has already explained, so I don't need to go in detail for that. What I will do is I will just go in brief that for them we made an insurance also, and at the same time given them special recognition, as well as some incentivize them to work in the front line. Similarly to our because this is the time to save our clients, so especially the one who are small clients, who very small clients, that macro clients as well as micro clients, as well as the SME clients and the retail client. So we announced as a CBFIN, we announced 1% discount in the interest rate on our own, and then the central bank has come out with 2% discount to everyone, which we wanted to extend to the smaller clients. But that kick started, and that has really at least gave some relief, temporary relief to the clients. At the same time, depositors, we are serving the depositors and informing them that the bank is not in the problem. The bank is in, your deposit is in safe hand. Otherwise, it would have been a disaster in Nepal. So fortunately, we have been able to convince the depositor not to withdraw their money, and they are in safe hands. Similarly, the shareholders, the monetary policy had just came and already explained by Anupama ji, and I think Bunkar sir is there. He will put a little bit more light to what today the monetary policy is all about. So this is the primary thing, and then secondary, we have come up with the idea, and also after consulting with all the business groups like CNI, FNCCI, the chamber, etc. We did exhaustive meetings, and then finally the very affected areas, less affected areas, and least affected areas. So accordingly, in today's monetary policy, 1 year support to the very affected area, and a little less support, 9 month support to the less affected area, and 6 month support to least affected area. So this is also we have been catalyst to do all these things between all the organizations. And at the same time, the need of the hour for Nepal is a little different than Bangladesh, maybe, because we are lagging behind in agriculture. So the focus was to give the more resources to agriculture sector. So in this monetary policy, 15% of the total loan portfolio has to go to agriculture by about a year and a half from now, or maybe a year and 9 months from now. So that's a good, I would say, a very big jump. And at the same time, for the SME clients up to 1 crore, that is 10 million rupees, another 15% of the portfolio of the bank has to go to that sector. That is little challenging to me, but I believe if we can achieve that, that will be great for the country. So these two will kickstart the economy on the grassroots level, especially on the agriculture as well as on SME and retail sector. We need a lot of agro processing industry, which Bangladesh is way ahead of us. And in agriculture products, Bangladesh is almost self-sufficient. We are getting a lot of supplies from Bangladesh, especially on potatoes and few other items. But we need to improve upon it, because $2 billion imports worth we are doing it. Apart from this, we have concentrated on mainly on the larger impact, which will come later. Fortunately for this year, we didn't had any much impact on the remittance, which we were expecting. But personally, if you ask me, I'm expecting at least 10 to 15% or maybe 20% down in the remittance for the next for this current year. Now it is already started. So there we need to make up that money by increasing the production in Nepal. So for that, we need a lot of small scale industries. So now the bank's focus should be to fund more productive sector than the trading sector, which has been thriving for last 2 decades in Nepal. On the policy level, now we are working with the government, so that the policies which is before the policies are framed, we are involved in that, so that we can work in tandem with the government. The banks and the financial institutions can work in tandem with the government, rather than after the policy comes and it comes as a surprise, and then we are trying to get it changed and all those issues. So rather than that, we are now trying to work in tandem with the government. Before the policies are announced, we are trying to get involved in that. We are also very sensitive towards the reducing the cost of the banks. Now, especially on the AMC, a lot of this AMCs are there, especially in the IT sector, the Pinnacle system and all those systems there needs to be revisited. Similarly, the rent of the banks are exorbitantly high in Nepal. I don't know about the situation in Bangladesh. So that needs to be reduced, because the interest rate has already reduced by 2%. And I'm hoping that in due course of time, another 1% will be reduced further. So the lending rate will come in single digit now, especially for the productive sector for sure. So that also needs to be reflected in the real estate as well. And the AMC, apart from AMC, now the traveling, Anupama ji has already mentioned. Now even the audit of the internal audit of the banks are taking place digitally. So the traveling cost and other cost is being reduced. And this year we have freezed. First, one thing which was a concern by Honorable Speaker, one of the Honorable Speaker, I don't remember his name, I'm sorry, that in Nepal, we have made sure that no employee of the bank will lose their job, at least for at least for next year, this current year. That means it has just started. So at least for 1 year, no permanent employee of the bank will lose their job. This has been understanding with all the banks, so that we need to reduce the cost and increase the work from home, which also mentioned by Anupama ji, is now taking place. And also the audit and all the other system we are introducing now. Digitization is taking in a big number. A question was, how many banks have come up with automation to open the account? Yes, quite a few banks, including NMB, has come up. Even with Facebook, you can open the account. So those are in line. I believe in next 1 year, every bank will follow this. And we are also talking to the central bank to, in small areas, we have 20 branches of different banks. I mean, 20 banks have their branches in a small area, which earlier was maybe was okay. But after the COVID, now the requirement may not be that much because the digitization is taking place. Brick and mortar branches has to be reduced. So we are
Mr.
talking to the
Pavan Kumar, Mr. Pavan Kumar Golian, I'm so sorry to interrupt you because as we have time limitation, we'll get back to you with some questions, what you have just mentioned. We will proceed to the next speaker, one of our distinguished speakers, Professor Barkate Khuda, PhD, Dr. Muzaffar Ahmed, Chair Professor from BIBM. Over to you, sir. Unmute করে নিতে হবে.
Is it okay now?
Yes, we can hear you.
Okay.
Yes, sir, please take into account the time also.
Yeah, I will be in fact very brief. Okay. It is 6:30. I will take not more than 7 or 8 minutes, maybe even shorter.
Thank you.
Mr. Moderator, Director General BIBM, learned discussants, the paper presenters, and all of those who have joined us in this webinar. Let me begin by first congratulating Professor Ahsan Habib and Dr. Shahidullah, his co-author, for coming up with a paper on reshaping governance in banking in the COVID-19 regime. I think governance has continued to be a major issue in not just the banking sector, in almost all public and private sectors, and much more so in the context of COVID-19. Now, I think several of you have alluded to governance and various pillars of governance. To me, corporate governance is based on 4 principles: accountability, fairness, transparency, and responsibility. And the 4 P's of corporate governance, which are basically the guiding philosophies behind why governance exists and how it operates, are people, which you have alluded to, purpose, process, and performance. And this has become much more relevant in the context of COVID-19, particularly in the developing countries. Now, I will take very little time, as I said earlier, because I've had the opportunity of extensively reviewing the paper. And I've already given my comments and suggestions to the authors to be incorporated when they're finalizing the papers. Now, what I have seen from the paper, which becomes obvious, is that the vulnerability to the pandemic is considerably higher in developing countries, and the ability to deal with it through policy is lower in the developing countries compared to the developed countries. This brings me to my one major fundamental question, and that is, given the greatest severity of the problem in the developing countries, the banking community would benefit from the experience gained from Bangladesh, Nepal, and others. I think Anupaji has she has articulated very well the experience from Nepal. And our good friend, Mr. Ali Hussain Pradhania from Bangladesh, insofar as the agriculture credit is concerned. Agriculture, as you know, is one of the 3 main pillars of success in Bangladesh. I would like to encourage Anupamaji and others from Nepal to give their thoughts. I mean, within the time constraint of 10 minutes, it was not possible to give all your points in detail, but if you can send your the discussion that you have noted in much greater detail, which could be incorporated by Ahsan Habib and Shahidullah, this will bring in the context of Nepal into the picture. At the same time, I would also request the paper, the authors, as I've already requested them, when I reviewed and sent them the comments, of trying to get experience from several other countries, particularly our neighboring countries, as well as the Southeast Asian countries. Now, one of the points that was alluded to by Mr. Dr. Vinod, or let me also make a brief reference to my contacts with Nepal. Since the late 80s, I have been in constant touch with colleagues from the Planning Commission in Nepal through the UN, World Bank, and other agencies. And I have had produced many students, both masters and PhD students, both at the University of Dhaka, the Department of Economics, and many more at the Australian National University in Canberra. So my contact with Nepal dates back to, it's over 20 years, and I produced many students and I have contacts, as I said, with various planning commission divisions, ministries, and universities. One of the points that was alluded to by Dr. Binod relates to global economic downturn, which, as he has categorically said, is highly negative for 2020. And I totally agree with him. The IMF, the OECD, the World Bank, the ADB have all given negative projections insofar as the GDP growth rate is concerned, and much more so for the advanced economies and the oil exporting countries where Nepal and Bangladesh are very well dependent on. And I think the previous speaker alluded to his suspected decline of about 20% in remittance. That could happen in Bangladesh and other countries as well. But for 2021 and beyond, the projections by IMF and others actually gave a positive growth, although, please note, although the positive growth is lower than what they had forecast for 2021 and 2022 in their 2019 projections. So it will, in 2021 and 22, we will improve our condition, but not at the level at which it was projected in by these agencies in the forecast, in the earlier forecast in 2019. As I said, I'll be very brief because I've shared my comments in writing with both the authors. And I think we have gained very rich experience from Nepal, Bangladesh, we know, and Mr. Pradania is one of the leading bankers of great accomplishments here. So I have already requested the authors of the paper to bring in more evidence on some of the things that have been said in the paper from the developing countries, and particularly from Nepal, Bangladesh, and other countries, to make the paper more comprehensive and usable by other bankers in the region. Thank you very much. I think I have taken 7 minutes.
Thank you, sir. Thank you, Professor. Thank you, Professor. You are exactly on time. Thank you very much. Now, without any delay, may I request Dr. Gunakar sir to share your short and sweet notes on the paper.
Thank you, Binod sir. It's really an excellent opportunity you have provided me to share some of my observations in this topical issue. It is really a difficult time, and the global economy, according to the International Monetary Fund, it says that the economy is going to be in new phase. So the economic activities are further expected to be disrupted around the world, and there are the risk of the stressed asset valuation, some sort of the protectionism, and the political instability, and the regulatory forbearance might have some sort of the positive implication in the economy, in the economies around the world to expand, and at the same time there is risk of the instability, some sort of the financial stability maybe at risk at some point of time. So these are the observations around the world. So if we see at this particular point of time around the world, central banks, they have been ushering particularly to recover the economy, how to revive the economy. This is a great challenge, and around the world, central banks have been using a number of measures. They have been introducing measures whereby the liquidity can be eased in the financial system, the interest rate stability can be ensured, and the resources, particularly the financial resources, can be channelized to the prioritized areas, particularly those areas. They create jobs, they help to alleviate the poverty, but at this difficult point of time. So there is a high risk that the poverty will go up, the inequality will go up, the social, some sort of the social cohesion that was maintained in the last, the number of years, number of decades that might be at risk at this point of time. So this sort of the doubts, confusions are there around the world. So the central bank's role at this point of time is to give the confidence to the market. So this is the role of the central bank. So in that line, the Central Bank of Nepal has also introduced the monetary policy today. So I was also one of the team members involved in the design of the monetary policy. So a number of measures have been introduced to strike a balance to help the economy to expand as well as to maintain the financial stability, as well as to maintain the external sector stability and the price stability in the economy. So since the topic is corporate governance, it is very important, and what I would like to share here that the private monitoring is at the heart of the corporate governance, whereby the disclosure requirements, auditing requirements, so the roles and responsibilities of the managers and the proprietors, the shareholders, so the agency relationships are clearly they are manifested. So that is at the heart of the private monitoring, which is called the private monitoring, that is at the heart of the corporate governance. But at the same time, regulating the regulators as well as the regulating the regulators. That I have been using this term. My professor, when I was there in the United States, the 1.5 decade ago in Williams College, he used to teach us the finance and development course, and it was really amazing course, finance and development, and where there were a number of discussions on the corporate governance. So even around the world, the difficult point of time, the difficult aspect, this difficult task is to regulating the regulators. So again, at this point of time, and when we are using some sort of the regulatory forbearances, we are helping economies to grow. When we are relaxing a number of measures to help to expand the credit, tomorrow there could be the risk that how to regulate the not only the regulators but how to regulate the regulators. So these sorts of risks are also there in the management of the corporate governance. Well, if we go through the perspective of the Basel Accords, the Basel I that was purely the concentrated in the capital adequacy. Then the Basel II came and it also emphasized for the supervisory oversight as well as the private monitoring. And again, Basel III, then it reinforced the capital adequacy. And what I think after this COVID, then again the private monitoring, again the corporate governance, they will be highly prioritized around the world. And they are really important for the banking system, banking industry, because there is huge stake of the government, there is huge stake of the depositors. So not only for the investors, not only for the the industrialist clients, businessmen, but also to protect the interest of the depositors who are unorganized. The depositors are really the one who are to be protected by the regulators, who are to be protected by the government, because the depositors, they do not have their separate organization. So they are unorganized and their interest is also to be protected. So just one example that I want to share here, that in the monetary policy that is announced today, what we have told banks, well, you can share cash dividend, 30% of your distributable profit if you have, but also you cannot distribute more than the weighted average deposit rate that is in mid-July, because since the interest rates are coming down, and it is very hard to really some sort of intervention introducing intervention in the market to fix the interest rate. So what we have indirectly said to the banking community, to the market, that well, depositors interest is also to be protected, because depositors are really the one who are the savers and who help you to mobilize the financial resources in the economy. And at this point of time, also to support the depositors, also to protect and also to encourage them is also important. So there are a number of the dimensions, not only from the single aspect. We could see the corporate governance as almost all the past speakers, some of the speeches, some of the the presentations I missed today because of some of my other obligations. But for the higher economic growth, for the sustainable economic growth, for the shared economic growth, what we need the capital, we need the labor force, human capital, as well as we need the total factor productivity. And the total factor productivity comes from the institutional development, and that institutional development largely relies on the corporate governance. So the corporate governance will really be, again, at the heart in ensuring the stable market, in ensuring the equitable distribution of resources, and in speeding up the fast recovery of the economy in coming days. I think everybody is in mood to, have the completion of this session at the earliest. So without any delay, again, I would like to share my sincere thanks to the organizers, and some of the presentations I missed, some of the, but the speeches are, they are really, the encouraging, and I also got some insight from this program. Thank you so much. With this, let me stop here. Thank you.
Thank you, Ganaghan sir. Thank you very much. Yes. Yes, just to let the delegates know that today the Nepal Rashtra Bank has announced the monetary policy, and they have said that there is zero tolerance on the corporate governance side. And so that is the regulatory message given by the central bank to the commercial bank or banks and financial institutions in Nepal. Besides that, there are so many other measures taken by the central bank to correct the corporate governance issues in Nepal. So thank you very much, and we'll be sharing you all those monetary policy which will come in the English very soon, and then we can share you the monetary policy announced by the Nepal Rashtra Bank. Thank you. Now,
Thank you, sir. Sure,
now
sure.
let me go to Dr. Mohammad Akhtaruddin Maan sir, Director General BIBM. Please take the floor, sir. And you are the key person today, and you are the Director General of BIBM. And again, let me thank you that we have a very good association with BIBM. We have been to your places several times. Before also, I was there as a central bank, as a retired employee from the central bank. I was there in the Bangladesh bank, and I've been closely working with the previous governor also. Thank you very much for your support given to central bank as well as to BFIN. Then please take the floor and share your thoughts, sir. Please go ahead.
Sorry to interrupt, Dr. Vinod. I would like to also thank Dr. Mohammad Akhtaruddin on behalf of QOQ Asia Limited for taking the time on a Friday afternoon and being on this live webinar. So we are all waiting for your, tremendous thoughts on today's topic. Please carry on, sir. Thank you.
Thank you, Saif, for your good introduction. Actually, you are one of the organizer of this webinar session, and indeed, it's really very, it's a very productive session that I would say. I was listening very carefully. All our distinguished speakers are actually a representative from Nepal heavily. They are really the guardian of the entire banking society, whether it may be the owners, whether it may be the bankers, whether it may be the central bankers, or CEOs of banks. So Anupama ji and Mr. Binod Atria, Executive Director, Mr. Gulian. I learned very interesting things from your experience. And I would must express my gratitude that you are really, it's really appreciating that you really elaborating all these experiences that you are crossing these days. And I'm very happy to be the part of this international webinar titled Reshaping Governance in Banking in the COVID-19 Regime. This is a joint initiative of QOQ Asia Limited, Bangladesh, and BFIN Nepal in partnership with Bangladesh Institute of Bank Management. Actually, by this time, we are very much showing our concern that is really a great concern and responsibility from the entire banking community, from the government, from the policymakers, that corporate governance is critical for effective banking operation. And this is particularly important in this crisis situation, the COVID crisis, which the world never have seen or came across. There were lots of pandemic before, the Great Plague in different times in 7th century or 13th centuries, but it was not lasting for a long time like that. And there are many natural catastrophes that have been experienced by Bangladesh and many other countries and neighboring countries, but that was not a long lasting like that. So it has a heavy toll on our economic activities, and as such hurt the banking community in their day-to-day operation and business. And so high, government and the central bank of of all the countries in the world were coming up with lots of stimulus package so that the bank can be stand up again with some solid liquidity injection or pumping, and also with some regulatory forbearance for a moment, for a few months, so that they can continue their business as usual mode, to 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 regain their economic activities, to add new momentum in their economic activities after 2 or 3 or 4 months of lockdown. So today the government and central banks in the most developing countries have a huge expectation regarding implementation of such economic stimulus package, where the banks, boards and leaderships definitely have important roles, because all these stimulus packages are bank driven, bank led. You have to implement all this stimulus package through the bank. Though there are some budgetary resources in terms of highly subsidized interest rate uh, are there, but actually it is in the form of delivering the credit resources to the stakeholder, different sectors of the economy, and then they will enjoy the very highly subsidized interest rate. So it is the responsibility of the bank. And it is more true for a country like Bangladesh, India, or Nepal or Pakistan, who are really bank-led economy. So like many other countries, including Nepal, the government Bangladesh has taken lots of measures, regulatory measures, but also come up with a huge amount of a stimulus package. In Bangladesh case, actually the central bank and the government together uh, offered more than 1 trillion Bangladesh taka equivalent of stimulus package, which is around say 10 billion US dollar, and out of which more than half of this stimulus package is actually the own resources of the central bank. And then you know what is the own resources of the central bank? It has directly a refinance scheme, refinance system, windows through which central bank will really pumping fresh monetary resources to the economy, so that the bank will be endowed with more liquidity, to continue their business. Because of this lockdown and this consumers and the clients great shy to maintain this distance, social distancing. They cannot contact directly and have no good appetite to continue their banker customer relationship physically. So there is a declining trend of deposit growth. So government first very prudently and wisely think that we have to pump fresh monetary resources. So this is one thing. Second, all the priority sectors like our agriculture for food self-sufficiency, a country like ours where we have 165 million population to feed with those population, and also we have the small, micro, cottage, medium industries who really contribute to lion's share of our employment, of our livelihood, of our income, and therefore of our aggregate demand in the economy. They have to be rescued so high. There was a big share of this stimulus package for those dedicated to those CMSMEs, and then the service sector, and as well as the export oriented sectors. So all this together, government come up since the April, the month of end of March and continue to April. And now the great task is actually start with the spontaneous participation of the banks to implement all this stimulus package. And the government and the central bank believe that with the regulatory forbearance for this time, that we continue not to, that they need not to report the status of their loan up to September. We just reduce the cash reserve requirement. We just reduce the repo rate. We just increase the time of the repo period to 365 days. All this actually to help them to survive in a more congenial and comfortable way, so that they cannot need to bear the high cost of fund so high. There is a highly subsidized packages of liquidity coming from the central bank and the government through the budgetary resources and from the central bank refinance schemes. Now, like many other countries, including Nepal, the government has taken this thing, and we came to know from the Anupama ji and Mr. Goyal that they are very much serious to develop online system, digitized payments and services system, so that the customers can be retained in the banking system, and the loan demands by the investors will continue as before. And so we also came to know from one of the CEO of our biggest one of the biggest commercial bank, which is in the public sector, Bangladesh Agriculture Bank, is one of the priority sector. It has been tagged since long time as the priority sector. So we came to know many of the steps that have taken to normalize this and to making the most comfort to these customers. So in line with these government initiatives, as I said, Bangladesh Bank has taken all these initiatives, I think, and the banks welcome it, and they feel comfort to really use this opportunity. And now you add in through your analysis, through this keynote papers analysis and your speakers analysis, that we need to be very careful to make a continuous assessment of our risks, sources of risk, evaluate daily basis DAR as practiced by the mega bank, that that everything that you express is really relevant for Bangladesh banking community. So all this is really the good steps that we learned that the Nepalese banks are taken, have taken all this. So I would like to finally congratulate Professor Hassan Habib and Dr. Shahid for their painstaking effort in preparing this keynote and providing us with the excellent and timely outcomes of their research. And I would like to thank BFIN, QOK Asia, the distinguished guests from Nepal and Bangladesh for their time and efforts in making the webinar successful. I am thankful to all the audience of the webinar for joining us today in learning strategies for fighting against this crisis in a more befitting manner. And before I conclude, I would like to thank our friends from Nepal. Again, let us consider today's event is the start of our journey of working together. Our collaborations, we can share our experience, extend our relationship to a new height by conducting joint academic and policy research and solving our problems together. I believe that we will have a very useful discussion today. And after accommodating all the comments of the learned discussion, I think the paper will be enriched and help the banks in the developing countries in overcoming the difficulties they are facing now. So by saying that,
before you conclude, may I ask you one small question which you can answer like in one statement? Is that okay with you?
Okay. Yes.
Okay. One of our followers, Hadiuzzaman Shorab, his question is, I would also like to ask all of our distinguished speakers from Nepal. The Nepalian banks have decided to make sure no employees will lose their jobs in banks. All banks jointly decided like that in Nepal. What about Bangladesh? Can BIBM give such suggestion to Bangladesh Bank?
actually, in this keynote, today's keynote paper, we already raised this question very seriously, very delicately, and that delicate issue have been dealt in our different platforms, in our discussion, in our seminar, in our dialogues, many times since April, May, June, all these times. And it has been adequately raised by all the stakeholders. And also the central bank, through his moral solutions, I would say moral solutions, and through his different directives, actually give messages to the commercial banks not to do this kind of, not to resort to this kind of, I think, suicidal type of decisions, that to firing and hiring process, firing process of all employees. Because if they are in fear, if you put them in fear, the productivity will again decline. There is no doubt, there is no denying. And they also, some banks are reported as going to decline their, reduce their salaries and fringe benefits, and also many other reservations. But central banks and we, the BIBM, we always raise this question very delicately and advise the banks, entire banking community, all the stakeholders not to do this, because it will really hurt the productivity of the banking bankers, the banking community. And again, this will jeopardize all the efforts taken by the central bank and the government to rebound the economic activities and quote unquote, side by side, the rebounding the activities of banking industry. So it has been really raised and advised and commented and from the central bank's directives that not to do this, to abandon this kind of move from the banking community.
Thank you so much, sir. Thank you so much for addressing this question. Dr. Binod, may I ask you one question? Actually, this question is to you and all other speakers from Nepal. Anyone can volunteer. My question is, how off-site inspection is being implemented in Nepal, especially during this pandemic that has forced banks to adopt digital platforms? Anyone from Nepal could volunteer.
Yes, yeah. Asan, can you?
You can on your video. Yes.
Chef, what is the question?
Okay, let me ask you the question one more time. The question which came to our Facebook page, how offsite inspection is being implemented in Nepal, especially during this pandemic that has forced all the banks to adopt digital platforms.
Okay, so let me just introduce, and I will request Gunakar sir to respond more appropriately, because he is the right person to respond, because he's the spokesperson of the central bank as well. So my personal perception is that during COVID-19 period, all the banks and financial institutions, they went for digitalization. They give more priority to the digitalization. And all of a sudden, the digital transaction went off. It went up. So during that period, the banks and financial institutions, they learn how to work from the home, how to connect from home to office. Those were the things they did. And in Nepal, financial services is the essential services declared by the government of Nepal. So as a result of that, we were bound to open our offices. We are bound to open our branches. We are bound to offer our services to the general public. So in doing so, now most of the banks and financial institutions, even Anupomaji can also comment, we went very fast in the digital process. That is what I can share. Now, Gunakarji, can you share your view?
Thank you, sir. Thank you, sir. It's really an interesting curiosity, and during the time of this COVID, and particularly during the time of the lockdown, we introduced three measures.
We cannot hear you, Gunakar sir.
Yeah, Mr. Gunakar Bhatta, we cannot hear you. Are you there still with us?
Maybe Anupamaji, can you share
Yeah.
how we did with the digitalization? We'll go.
And also,
Yeah.
I would like to ask, I would like to add one more question along with the question I have just asked earlier. What are the bank's average interest rate on deposit and loan and advance in Nepal, which is a single digit in Bangladesh at the moment?
Okay. What I would like to express is, as we talked about digitalization, the audit, people also, they could not reach to the branches. So they've also started taking audit forward for the branches, for the units digitally. So they get, because we were digitalized and the credit files were already digitalized, they could just, download those files and review it. So actually face to face and in the branches, they could not really go and have their presence there. But the audit that they needed to do has been going on. We've been having our external auditors also doing their audit from the central office, making sure that all their requirements for credit files are availed with them digitally. So for this year, since till the lockdown period, I think this is the way forward. Digitally, they're carrying on their audit activities also. Currently, physically, they are not able to go and visit the branches and the units, but whatever they could do from the digital platform, they are carrying it on. And we've been doing that. One is that. The other, for the interest rate factor, what has happened is we are also looking for bringing the lending rates down to single digit. Banks, because our fiscal year has just started, banks have slightly reduced the rates so that we could offer customers single digit interest rate. Recently, we are reducing our fixed deposit cost and our savings deposit cost and individual fixed deposit cost also, but we are making sure that the return they receive, at least in the fixed deposit, is no less than the inflation rate that we are envisaging. So most likely, our cost of funds with the reduced rate recently done a day or two ago, banks have started doing that. We might see 5 to 6% averaging out, and on the lending side, maybe from 9 to 11% at the moment, but very soon, average rate is already around 10.5 in the banking sector. So that is expected to come down also by 0.5% or 100 basis point towards 9.5%. So we are also looking and going forward in that line. But we want to make sure that the depositors receive at least interest rates close to inflation rate that is envisaged around 7%.
Thank you, Anupamaji. Thank you so much for your valuable comment. Dr. Vinod, normally I conclude any of our live sessions, but today you are going to conclude this live session as we are doing this, in collaboration with BFIN and QOQ Asia Limited. But before I leave, I would like to thank everyone, all our distinguished speakers from Nepal and Bangladesh. Thank you so much for taking your valuable time on a Friday afternoon and join this live session. And your undivided cooperation. Thank you so much to all of our speakers. Thank you very much. Over to you, Dr. Vinod.
Thanks, Chef. Thank you very much. I think let me close very quickly. Let me thank all the paper presenter like Syed and Dr. Asan for your tedious work that you have done, and you have shared this paper to us. And we'll be sending you some of our comments to you so that you can incorporate some of these things in your paper if you wish to. Let me also congratulate QOQ for hosting this conference together with BFIN. Indeed, it is a great pleasure for all of us. I also like to thank all the distinguished speakers who are here today and all the listeners who are here, those who are listening from the Facebook. Thank you very much. Thank you very much. I think we need to close as soon as possible. And let me close the session again. Thank you very much. We'll be keeping in touch again and again, and we'll be sharing our thoughts again and again. We'll be hosting such type of webinar again and again. And if I will be doing any webinar, I will be requesting BIBM to share, to participate in the webinar. Likewise, I also request the BIBM to suggest us if we can contribute through our financial sector audience or through our experts, so that we could learn. During this pandemic period, and at least for the betterment of the whole society and for the betterment of the financial system as a whole. So with this note, let me thank all the speakers, all the paper presenters, all the audience, and let me close session over here. Thank you very much.
Thank you, Mr. Vinod.
Thank you, Dr. Vinod. Thank you so much. Thank you, everyone, one more time. It was an amazing session. Obviously, I would request everyone, stay home, stay safe, take precautionary measures. If you need to go outside, please, be very careful, as we are fighting with an invisible enemy worldwide. So obviously, be safe along with your family and friends, because we all believe we may apart this time, but inshallah, we'll get through this together. Thank you so much, and have a fantastic evening ahead. Take care. Bye-bye.
Thank you. Bye-bye.